Let's get right back to Paul Gardner. I don't know if you're disappointed about the IMAX screens, but let's get right to your top picks. And first up, an energy sector name. You've got ARC Resources as your top pick here.
Yeah, usually I don't talk about resources that much. That's kind of the domain of Bill Harris. But ARC is a long-time pick. It's incredible free cash flow generator. You know, it's in the natural gas space. So as we see natural gas spiking beyond 8, probably going higher even with these, if the summer's hot, it's going to be higher. And of course, with all the disruptions happening in the world with the war, we think ARC is positioned incredibly well. Great producers, good operators. Their free cash flow yield is something like 17%, and we think that it's probably worth at minimum $25. It still trades cheap relative to its sector, and in historical nature, it probably should be reevaluated. You know, because the end profitability of this company is large. They're providing capital to this new build called Kakwa in BC, which is going to just increase their distillates and all their midstream assets. So we do think that it's still, not only is it's not too expensive, it has some growth potential. So we think there's more of a run to it, and we still like it.
Yeah, I was just looking at the analysts that cover that stock. We flashed it on a board there: 15 buys, 0 holds, 0 sells. So they definitely agree with you. Let's get to the name that you have been kind of talking about throughout today when you've been talking about industrial REITs. Next up, Nexus Industrial REIT is a top pick.
Yeah, so I would say this is a small cap, but it's actually got to $1 billion. So that's the one good thing about Nexus. It is industrial. It owns very good assets. It repositioned its whole portfolio and restructured its whole portfolio. It was more of a blended office, retail, and industrial, and it's become a pure play in industrial. One thing I really like is pure plays. And like I said, industrial is in a sweet spot right now. They can hike rents considerably. And also, they have access to a private real estate firm that holds something like 5 million square feet of industrial, which they constantly keep buying from them. In lieu of payment, they give them shares. So they're one of the largest, if not largest, holders of Nexus Industrial REIT. So they have almost some inroads into all these kind of interesting properties. And just the sector this company trades at a slight discount to its NAV. It trades at about a 10% discount. And relative to, as I mentioned, to Dream Industrial, and for that matter, Summit, it trades at a discount to the competitors. So we really like it because it only trades at, let's say, it trades at about 15 times AFFO, and it should probably trade more like 18 to 20. So we think this has recently gotten hurt because it's an acquisition story, and with liquidity being drawn out of the system, not because of fundamentals, but because of liquidity and its small cap in nature, it did get hit. We think it's a buying opportunity, and we still hold our position and are very comfortable with it.
Okay, and your last top pick is a name I don't know very well, Neighborly Pharmacy. Why did you choose this one?
Yeah, so once again, this is kind of, it's a small cap in nature, but it has grown. It's a fantastic opportunity to consolidate drugstores, retail drugstores in more rural suburban areas in the prairies. They just did a large acquisition with a company called Rubicon that gave them, I believe it was 40 pharmacies. And the accretion of those pharmacies really added to the bottom line. It's not really much of a dividend play. It's more of a growth by acquisition. And once again, it got hurt by the liquidity strike that happened generally to the stock market. So it got knocked down. But we think this is not only defensive but offensive because their margins are incredibly good. And they're growing beyond what everyone had expected in the analyst world. And we think it's poised to outperform. And it's, like I said, you're dealing with drugstores. And drugstores are not only great from a defensive asset class, but they're great from the fact that pharmacies have become more where we visit it every day. There's so many services they provide, not only for the province, but for medical care. And we think this is a great acquisition story.